So thank you everyone for tuning in. We are very excited to get started. Today we will be talking about AML investigations and putting transactions into context for better decisions. My name is Jean Villedieu and I'm a co-founder of Linkurious, where I'm in charge of sales. And for today's session, I'm very pleased to have alongside me Regil.
Hi, everyone. Thank you for registering and joining us today for this webinar. I'm really delighted to join up with Jean and present to you why putting transactions into context is vital in an AML investigation. To introduce myself, I'm Regil, and I lead the forensic technology practice at Control Risks in the Middle East. I am based out of Dubai, and I have over 10 years experience conducting forensic technology investigations, AML reviews, sanctions lookbacks, and I've also helped some of the banks in the region with their compliance transformation journey. As Cecilia mentioned earlier, the session will be interactive with some poll questions throughout. And please do ask any questions you have via the Q&A platform. And we'll try and address as many as we can at the end of the session. So before we deep dive into the presentation, let me take you all through today's agenda. In today's session, we will look at what AML is, how a typical money laundering process works. We'll then discuss why context is key in an AML investigation. That'll be further explained using a case study, and we'll close out with a Q&A session. So now let's look at what AML is. As ACAMS defines, AML are controls that are put in by organizations, especially financial institutions, to stop money launderers from injecting illicit funds into the banking system. Some clear examples of illicitly acquired funds would be drug trafficking money, terrorist financing, bribery, etc. And there has been a significant push from regulators around the world enforcing strict policies and procedures to be followed by the banks to prevent money laundering. And if you ask me, from my experience in the region, I can clearly say that there has been a lot of new policies that have been introduced by the Central Bank of UAE in the last 2 to 3 years, enforcing AML regulations on the financial institutions. Now, with that said, let's look at how a typical money laundering process works. So the first step, it has 3 steps. So the first step involves introducing money into the financial system, which is called placement. And in this stage, the source of the money is easily traceable. So what money launderers tend to do is exploit the weak AML controls using deception or corruption practices, like bribing an employee within the organization. Some good examples of placement would be real estate deals in cash, purchasing a large volume of foreign currency from exchange houses. So once that is done, the next step involves carrying out complex financial transactions to camouflage the illegal source of cash, which is called layering. And typically this is done by transferring money between accounts, splitting the money before the transfer, and to make things even more complicated, even cross-jurisdictional transfers happen. And the final step to this process is integration, where the money is returned from seemingly legitimate sources to be used by the criminal. And at this stage, all suspicious traces would have been erased, and the funds can be easily used without raising any concerns. And a good example of integration would be using cash to purchase assets that will yield income from their use or sale. So they would be used to buy properties, luxury cars, jewelry, etc. Now that we've seen how a typical money laundering process works, we need to understand that these processes and techniques are changing and getting sophisticated day by day. As you can see in the screen here, there are so many money laundering techniques and schemes, and money launderers are introducing new methods each day, which is making it more difficult for financial institutions to keep with the pace. I won't explain all these schemes today because I could easily spend 2 hours explaining each one of them. However, I'm happy to explain any of them later during the Q&A session. One key point is to understand the patterns within these transactions to identify the scheme. The other point that I'd like to highlight is that the regulators expect the financial institutions and organizations to have the appropriate controls and technology in place to be able to detect these schemes very quickly. If you ask me, I do remember an instance where one of the regulators approached a bank for not reporting an incident related to Chinese typology. So what Chinese typology is a scheme where high volumes of deposits were made in cash or in the form of remittances from ATMs, which are then immediately withdrawn or transferred in large volumes to Far East Asian jurisdictions like China, Hong Kong, Taiwan, Singapore, etc. Now, the question that comes into mind is, how did the regulator come to know about this transaction? So what happens is the regulators collect information that is being reported to them by various financial institutions, and they consolidate them. And once this is in a consolidated form, they can easily identify other financial institutions that have been part of the transaction and still have not reported about it. This is why organizations need to have relevant controls, processes, and technology in place to keep up with the pace. So let me quickly pause here and ask all of you a question. When it comes to conducting an AML investigation related to a transaction or a client profile, what has been your biggest pain point? Is it that you do not have sufficient information to conduct the investigation? Or are you not having the right tools? Or is it that the transactions are so complex that the tools and the information that you have are not sufficient? Or is it all of the above? I'll give all of you a few minutes to post in your votes. I can see a really mixed response coming up. I'll just give it a few more seconds before closing the poll. Right. So I can see it's majority of the participants have mentioned all of the above. And I'm hoping today's session would provide you with some insights that will help you with your investigations and help you answer to some of these questions. So let me start by saying that there is never a single solution for this problem. But what is required is really innovative thinking. And institutions need to have technology solutions that can learn dynamically from findings and patterns that have been identified by the investigators, rather than having to create AML rules on the monitoring platform for each and every scenario. The other most common flaw that we've seen is that in transaction monitoring is the number of false positives that get generated if the system is not configured properly. And what happens because of this is that the key transactions or the more critical transactions get lost in the queue when the investigators are spending a lot of time looking at the false positives. And along with all of this comes the time pressure that the investigator has to encounter, which can also result in wrong decisions. To add to this, let me add some statistics to this problem. So according to the United Nations, the estimated amount of money laundered globally in a year is between 2 to 5% of the global GDP, which translates to around 800 billion to 2 trillion US dollars, with more than 90% of the laundered money not being detected. And experts have also estimated that around 2.8 billion laundered money is in the form of cryptocurrency. And the problem is only expected to grow as cryptocurrencies grow more popular. And if we were to look at the compliance spend, according to a Forbes article, the average annual spending on compliance, including labor and third party cost, is around $48 million. So we know how big the problem is, and it is expected to grow. So let us look at how to approach this problem more efficiently and effectively. So what we need to keep in mind is a transaction should never be looked at in silo, as it does not provide the appropriate context behind the transaction. What we see in a single transaction is just the originator and the beneficiary details, but this is not sufficient in order to decide on a transaction. You need to expand this transaction further, and you need to understand if there are other entities or other parties involved in this transaction. Is the transaction being diverted within internal accounts? Is there any kind of layering happening within this transaction? And in order to do this, you have to supplement your investigation with other data sources. And all institutions have a lot of data points that can be leveraged while conducting an AML investigation. This includes KYC profiles that are collected and updated on an ongoing basis. Access to external websites like WorldCheck, where you can get access to the international watch lists, the PEP database. You also have local watch lists that are provided to you by the local regulators. And last but not least, you have historic banking transactions residing in the core banking system, SWIFT platforms. You can even enhance your data by using open source data like corporate registers, etc. And what is needed is you need to have a technology solution that can consolidate this this information for the investigator into one location. You can do this by using a data warehouse or robotics to help with this. This would save a lot of time and cost to the investigator. Once this is done, you need a solution that can help link the various data sources together and help you visualize it, because our brains understands patterns better when it is visualized rather than looking at transactions in a database. I think now would be the best time to pass it over to Jean, who will be taking us through a case study and explaining how Linkurious as a technology solution can help putting transactions into context during an investigation. Over to you, Jean.
Thank you very much for this introduction. So first, Linkurious Enterprise is an investigation software powered by Graph Analytics. It's used by investigation teams throughout the world to stop fraud and money laundering networks. Linkurious Enterprise, and you can see a screenshot of the product on the right, is a browser-based software that can be installed on your servers or in the cloud. It provides a very intuitive UI through which fraud and compliance analysts can detect, and investigate suspicious clients or transactions. So first, what do we mean by Graph Analytics? So this approach has been pioneered by the likes of Facebook and Google. It consists in analyzing data as a set of entities and relationships. Graph Analytics help connect data scattered across different silos. It's really the backbone to have a holistic compliance picture within the organization. At Linkurious, we use a graph approach at every stage of the analytics journey. So we model data as a graph. We store data in graph databases such as Neo4j. We then detect graph patterns. And finally, we visualize data as a graph. With that, it becomes possible to uncover across billions of entities and their relationships suspicious behaviors that would otherwise go missing or require a lot of manual investigations. What I want to stress here is that graph analytics in anti-money laundering goes much further than just cosmetics. It's really a new way to tackle AML challenges. First, with legacy technologies, data is stored in monolithic relational databases, and that tends to lead to data silos. Even if they have access to some graph visualization user interfaces, analysts typically need to chase information across multiple tools and tabs. In contrast, with Linkurious Enterprise, all of the relevant entities and their relationships are captured and made available via an easy-to-use UI to the compliance analysts. So in seconds, they can have access to everything that a client or transaction is connected to. Secondly, the problem with information being hard to get access to is that compliance analysts are forced to make bad choices. With Linkurious Enterprise, analysts can get access to more information faster, and thus they can act with confidence, no matter how complex the situation is. Finally, legacy analytics are geared toward thresholds and individual behaviors. So this approach brings a lot of false positives, and it fails to identify the smart criminals who know how to bypass simple rules. Linkurious Enterprise helps compliance teams implement a complementary approach, which is focused on the detection of suspicious relationships. This approach helps identify the sophisticated fraud and money laundering networks that represent for financial institutions the biggest threats that they face. Today, as an organization, Linkurious is helping thousands of analysts throughout the world, some of them working with government institutions such as the Attorney General Office of New York or the Indian Tax Agency, and some of us working with financial institutions such as Zurich Insurance, Before Bank, Pioneer, and more. We also work with 3 of the top 5 largest banks in the US. Now, I would like to switch gears for a second and walk you through a concrete case study that will highlight the type of impact that the graph analytics approach of Linkurious and Control can bring to compliance teams. A couple of months ago, the International Consortium of Investigative Journalism and its partners published a bunch of stories about the fins and files throughout the world. And you can see some of the headlines associated with those stories on the right. This investigation is really an unprecedented look at some $2 trillion in suspicious transactions that happened between 1999 and 2017. That investigation was successfully conducted with the help of technologies such as Linkurious and Control. The fins and files are based on suspicious activity reports. These are filled by banks when they fear that a transaction they are processing is illegal. The investigation has made headlines throughout the world, and for the general public, the focus has really been on the ties between a few global banks and some notorious individuals, such as Paul Manafort, Trump's former campaign manager, Jolo, the brain behind the 1MDB scandal, or even Semyon Mogilevich, an alleged Russian organized crime boss. So that's, I would say, the public side of the investigation. But there's also an underlying story to this investigation. What's interesting is that the ICIJ faced a very complex AML challenge. So they had limited financial resources and limited domain expertise. And at the same time, the journalists wanted to dive into the complexity of a trove of suspicious activity reports to uncover evidence of financial crime. So in order to do that, they used Linkurious and Control, and specifically the ICIJ used a combination of machine learning and old-school investigation work to extract transactional data from the raw suspicious activity reports. The effort resulted in some 55,000 records of structured data, and it included details on more than 200,000 transactions, all flagged by the banks in the suspicious activity reports. The data was then loaded into Linkurious and Control, and with the help of our software, the journalists were able to visually explore the data to analyze the context surrounding suspicious activity reports or suspicious individuals. And that's what led to a series of news articles, which is really driving right now the conversation around the future of anti-money laundering. So this is a very concrete example of how some organizations around the world are using Linkurious and Control to conduct AML investigations. Now, I would like to give you a taste for how it works in practice. And in order to do that, we will go together through a demo. That demo will cover an AML investigation scenario, and it will revolve around a specific context. So in our scenario, a series of cash deposits has been flagged as suspicious. And as an AML analyst, we are tasked with analyzing data to make sense of the situation. But there's a few problems here. First, the direct environment of the transaction doesn't provide clues about whether the transactions are fraudulent or not. And secondly, we need to combine different data sources, such as information about retail clients, corporate clients, politically exposed persons, and publicly available corporate registries to really understand what's going on and ultimately make the right call. So you should be able to see my screen right now. So this is the Linkurious and Control UI, and we are connected to a dummy data set. So I'm going to look up the suspicious clients that I was mentioning. Just typing some text here. I can see result pop up. We go ahead and click on that result, and it immediately brings the Linkurious and Control UI. We see a node representing the client, and on the left, a bunch of information about that node, including the fact that it has a name, it has a type, and so on and so forth. I can double-click and retrieve everything that this company is connected to. Or I can undo what I just did and instead be more more fine-grained in terms of how I want to explore the data. Maybe I'm just interested in the address connected to Adolf's arts gallery, or maybe I want to get access to the phone number. I can make these sort of choices, which is quite important in large complex data sets. Let's bring everything at once into the equation. So we see that among other things, this client is connected to a bank account, and we see a few transactions that immediately pop up. So I'm going to go ahead and click on one. We see a date, and we see that it amounts for some $49,000, and it's a cash transaction. We see another such transaction, and we can also inspect that. And we see one last transaction, also cash transaction, also a significant amount. If we want, we can double-click on that bank account and retrieve all the other transactions that are associated with it. So let's do that. Just one sec. I'm going to click on the button. Yeah. So we have some more data which is added to the screen, but as you can see, it doesn't bring a lot of value, but mostly just noise. So we are going to undo that, and we are actually going to go in another direction. So we see that there's a bunch of things associated with the client, but there's also a client, a company owner, I guess, an officer of the company called Adolf Green, with some information about that person here. And somehow it's connected to 6 other entities. So I'm going to go ahead and double click, and we are going to learn more about Adolf. So first of all, we see that Adolf is tied to a loan by a as-loan relationship, and we see that this information is coming from a retail bank database. Same thing for the phone number, same thing for the IP address. So apparently, Adolf's Arts Gallery is part of the corporate banking branch of our organization, whereas this guy is part of the retail bank branch of the organization. So Adolf is tied to a bank account, okay? And this bank account, interestingly, is tied to the bank account associated with the company. We can bring all of these transactions into a timeline view to get a feel for their spread in time. So we're going to do just that. And here, the transactions are immediately plotted on the timeline, and we see the distribution and basically how many transactions happened at different time intervals in the past. Mostly, we see that there's a regular transaction happening each month with a little bit more transactions recently. Of course, the flow of money is quite similar. It's always coming from this bank account to that bank account, and we can see that by following the arrows here. So all of that is fairly consistent with this company owner drawing some money from the bank account of this company. So nothing illegal really going on with this. We have quite a bit of relationships here on the screen, and we may want at some point to clarify that by merging those. And I'm going to do that by bringing the grouping capabilities of Linkurious Enterprise. And we are going to ask the software to group the transactions to make the situation easier to read. So we have pivoted from Adolf's Arts Gallery. We have identified the company owner. We have identified that there are some transactions involving both parties, but nothing really suspicious about that. What's interesting, though, is the fact that this guy is connected to an address that seems to be shared with another entity. I can go ahead and double-click, and we see another person pop up. Okay, so we are going to go ahead and follow that lead. We see that this person is connected, for example, to an email address. Once again, this information seems to be coming from the retail banking database. but interestingly, that person is also a CEO of another company called CNA. We can follow that lead, and we see some more information associated with the company. But what really pops up for me right now is the fact that both the phone number and the address are associated with yet other entities. So I'm going to go ahead and select those, and we are going to see if, what it is that they are connected to. There's a new entity that pops up. It's connected to both the phone number and the address that are associated with CNA. And this information is coming from an external data source. It's coming from an ownership registry, a public ownership registry. Okay, so we see this company. Let's double click. There's some new information that pops up. So we see that first of all, it's tied to someone called Johnny Potts, who is an officer of that company. And I can see that this person is actually a politically exposed person. So that's quite interesting to me. And the company is tied to a bank account. So I don't have a lot of information about that bank account because it's not. Target Realty is not a client of the bank, but I can see that the bank account has received actually some money from the bank account associated with Adolph's Art Gallery. Okay, so let's zoom out a little bit. We can also, plot the data on a map. Sometimes it can be insightful, and we see exactly where the various addresses that we are looking at and where the parties are actually based. We can also slice and dice the data. Maybe we want to remove the addresses from the visualization or the loans. Maybe we want to be more fine-grained, and we want to look at the various bank accounts that are involved here and see how much money is inside the various bank accounts, or filter the bank accounts based on the amount of money that they have sent. It's very easy to do this sort of a slicing and dicing visually via the filtering panel available in Linkurious Enterprise. What's really interesting for me, though, right now is that when we take a step back and look at the entire situation, we see that there's a bunch of cash deposits that are happening in this bank account associated with that person. And that bank account is controlled by this person who is in touch indirectly via another person and two companies with a politically exposed person. And this bank account is also sending money to a bank account controlled by this politically exposed person. So we may very well be looking at a case of corruption or money laundering, where some cash deposits are made on a bank account controlled by this entity and then funneled to a politically exposed person. Linkurious Enterprise helps me surface this type of insights and really understand the context around a specific entity or a transaction, and navigate through a complex web of information to find relevant information and ultimately make the right calls. Once we have uncovered something of interest, we can actually share our insights with colleagues. Maybe I want to find a suspicious activity report, and I'm going to do that. I'm just going to go ahead and pick a name or whatever. I'm saving the visualization. I can share that with a colleague. Let's say that I want Regil to have a look at that. I would simply type his email, and he will be able to get access to my results and take it from here. I can also, in a couple of clicks, simply export as a picture or as a spreadsheet for processing in other tools. So far, we have seen how to use Linkurious Enterprise to speed up the investigations. Now, I would like to talk a little bit about how Linkurious Enterprise can also be used to streamline the monitoring of your data and help uncover suspicious and complex patterns. So the product includes an alerts dashboard where you can create alerts, and I'm going to show you what an alert looks like from the perspective of a developer or data scientist. Basically, it uses code to describe patterns that are of interest. Here we are looking for persons that are interconnected. So we have a person here, and it can be tied via an address, an IP address, a phone number, or is of feature of relationship to another person, and we are interested to find when those other persons are politically exposed persons. And then we are also doing some processing to look at whether our initial point of interest has made significant cash deposits in the past few days or few months. Okay. And ultimately, we return the result. So it's really a combination of looking at pattern in terms of transactions, which is I would say traditional, which is the realm of traditional analytics, but combined with looking quite deeply, up to 10 level deep, into the relationships surrounding those transactions. So we can create the alert, and when it's created, as an analyst, I would simply focus on reviewing individual results, such as this one. And here we see such a situation where this individual is tied indirectly to this other individual, and in a way that matches the pattern that we just described. So this alerts dashboard is really a way to automate the sort of manual investigation that we have seen earlier on together. Okay, so that's it for the demo. I'm going back to my slides now. There are really three key capabilities that make Linkurious Enterprise so effective in terms of AML investigations. The first one is that with the UI, the investigation UI, it becomes possible for any analyst to untangle complex networks. So you can use filters, temporal analysis, geospatial analysis to dive into complex webs of relationships and find the critical insights that you need to make compliance decisions. Another critical aspect is the fact that Linkurious Enterprise helps automate investigations. You can detect suspicious patterns automatically, and that's what we have seen with the alerts module. But it's also possible to turn repetitive investigation processes into simple forms or buttons. And finally, all of that comes in an enterprise-ready package. So Linkurious Enterprise provides a REST API that makes it very easy to integrate our software with other applications. And it includes advanced security options to secure your sensitive data and make sure that it remains safe. So why do organizations choose Linkurious Enterprise? There are really two reasons for that. The first one is all about accelerating investigations, and we have clients that are regularly seeing investigation processes accelerated by a factor of 5. So it's really about gaining new visibility from the relationships hidden within your data, no matter how complex, and ultimately it translates into the ability to act with confidence, the confidence of knowing the full picture. So that's one big element. The other important element for clients is really the fact that with graph analytics, you can identify money laundering schemes and cases that would otherwise go unnoticed with other approaches. So it's really all about enhancing your compliance system and make sure that it also works to detect the high-impact criminal networks and the schemes that they use to attack financial institutions. So with access to the right technologies, compliance teams can help their organizations become leaders in their markets. Today, effective compliance is becoming a real competitive advantage. For example, neobanks and fintechs are leveraging technology to create unobtrusive compliance processes that translates in better customer experiences and ultimately more clients. But compliance also comes with a cost. With more and more public and political scrutiny on compliance issues, financial institutions that are lagging risk receiving large fines and bad publicity. And finally, effective compliance allows financial institutions to enter new markets in a way that will not create unnecessary risks down the line. So that's it for today's presentation. We are happy to answer any questions you may have.